Hey everyone, Double P here and welcome. So in today's trading session, I attacked Tesla and it's a very good trade. Love it. So what's the first thing we always do? First thing we always do is we always draw the box here. What's the box? The box is volume. The box is volatility. The box is price action. And the box is support and resistance. That's what comprises the box. So what happens when the position opens up under the box? We tend to take a short position. Now, if it opens up like a standard deviation or possibly two standard deviations below the box, we're going to wait because it could have a rebound effect and try to fight and move its way back inside the box. So with Tesla, I just sat here and I waited. So this was the first channel I drew in pre-market. This was the second channel. Sorry, I drew in pre-market. So let me just remove it there. You'll be able to see it in a second. Let's come over here. First channel that we draw. We look at this move right here. This candle, it's not a Maribozo, but it's like, it's some good sell side activity. So I'm waiting on this candle right here, and I don't take it because this is a long, elongated candle. So I wait for this move right here. Let me draw this channel for you. It's very tight because that's how algorithms trade. So we'll adjust that steepness. So that's channel one. Let me open this up a little bit more for you so that you see it. So you can clearly see where the algorithms are trading. So I just had to wait. I had to sit and I had to wait in this position. So roughly around this area right here, on this next channel, I'm like, all right, that first channel right there, I'm waiting for that move up. This was the high. So what happens is on the high right here for the intraday high, when it taps it one time, two times, and fails, you know there's going to be the reversal. So let me remove this right here, and you'll see why I have my price level down here in a second as I go through the lesson. So as soon as it tapped and it failed, this is when I draw my next channel. That's the second channel right there. So that's when I send out the trade to you guys at the Platinum X Power Option Trader Groups. Right on this candle failure right here, I wait for this formation to happen off of the high. I send it out right there to you, roughly around 9:38 actually, 9:39, so you should have got the text. And I just sit in this trade. I just took a nice size position like I always do, and I just rode this down. All right, you see the channel right there. So what do I have? Why do I have two price levels right there? Because this is my support. This is my support and my resistance. So this is resistance 1. This is resistance 2. And I'm looking for off of the low right here. Then this was the low. Then that was the low. That was the low. That was the low. So that's resistance 1, resistance 2. I said to myself, off of this configuration right there, that is my second and final take profit. Anything goes, if the position Tesla goes over that price point, which is 239.71, I'm out of the trade. Other than that, I'm going to sit in the channel and I'm going to ride that slope. So when I hit the low here at 238, 238.02, I'm like, and look at this candle. This is a crazy, this is the $1.63 range. From the top end to the low end to the open to the close. It was just, that was a wild range. So I'm looking at it, I'm looking at it, I'm looking at it. And I should have took profit here. I did not. I should have took it there. But then I got out right here on 952, just when it was cracking over here. And then I'm doing my other work, and then I decided to send out the close alert to you guys. I think I sent it out to you guys around 954 or 955 or whatever, but it doesn't really matter. From this point forward, I have to stop sending you my close alerts. And I have to do it because I've been advised by my legal team that if I continue to send out close alerts to you guys, that's basically me telling you and giving you financial advice, and legally and for compliance purposes, I can no longer do that. So consider yourself lucky. Consider yourself very blessed. Moving forward, I'm going to send you, and as you're obviously looking at my trade alerts anyway, you're seeing how I'm structuring my trade alerts. I'm telling you that they're my trades. So if you want to get on those trades, you can get on those trades. So you have to look at now your profit and loss parameters. You have to look at the last, 6 months of me doing these end of the day trading recaps for you. This is how you're going to learn. Iron sharpens iron. So if you're brand spanking new, you've been here a week, week and a half, 2 weeks, consider yourself blessed. Go back and look at all the end of the day trading recaps that you've got in email. That's going to be the quickest path of success for you to know how to trade, to know what to look for. As well as you're inside the course anyways, there's no rush to wealth. There's no rush to getting rich. If you follow the course curriculum, you follow the progression, you follow everything that I'm telling you to do, you watch these end of the day trading recaps, which are gold and killer, by the way, you're going to be a fantastic trader. So my advice to you is, when I send out the profit and the loss parameters, when I send out the text alerts, and I send out the emails, that's your guideline now. It's up to you. You can take as much profit as you want or as little profit as you want. Your stop loss can be super tight or your stop loss can be big. It's your call. It's your decision. It's your capital. I'm here to help you. You can send in tickets to the support desk. My guys and girls will help you. You can leave questions in the membership community. Your questions will get answered. You're not by yourself. I'm with you every step of the way. I'm sending out trades. So when I'm sending out trades to you, understand and know that these are the highest probability, highest profitability trades that I'm sending out. So wink, wink, nudge, nudge, kind of get on it. But again, totally your call. I tell you to do your own research, do your own due diligence on every trade, which you should be doing regardless, right? Because that's how you're going to become a better trader. So that being said, that's when I got out, and then you see the rip here on Tesla bounce through. I was really waiting here because I saw this 200 right here, and then 200 was the incline wasn't that deep, but the slope was deep enough that I'm like, everything is going under, right? No matter, even if I drew the box here, because the 200 is predominantly stronger in this particular instance, and the 20 is under the 200, that means the 200 is predominantly strong. So you have to look at what the 200, intraday 200 is doing, right? This is not the daily 200 or the weekly 200. This is the intraday 200 on the 2-minute candle. Very big difference. Don't confuse it. Don't confuse it with the daily 200. Completely different animal. That's the secret to my trading, right? So and I'm looking at this, all this right here is everything that I'm looking at. This is a wide state. What have I been telling you guys and girls? Where do you take your profits? You take your profits from a wide state, because this is expansion, and then however you're taking your trade upside to the downside. When you have that expansion and it's a wide state like this, that's when you want to take your profit. You see? That's when I take my profit, right? When it's a wide state, it's still hugging the 20. And as soon as it breaks that 20, it breaks that channel, I'm out. This is something you need to learn and need to understand. I mean, you could still stay in the trade if you want, but I have enough experience now to know, because I've got my volatility bands up here as well. My volatility band, the inner band for the volatility band, the inner 20. So I'm looking at everything. I'm looking at support and resistance. I'm looking at what the algorithms are doing. So I know exactly what I want to do. I know exactly where I want to get out. And obviously, I'm looking at institutional hedge fund, high frequency trading, order flow, right? Prop desk, all this order flow. This is the volume profile, all order flow. I want to see where the algorithms, I want to see where the liquidity, I want to see where the nodes are. So the setup is there. So I hope you enjoyed this end of the day trading recap. It was a nice, beautiful trade. Margin account, everything is in real time. I don't need to go through that again with you guys. So fantastic trade on Tesla. And you see right here what Tesla's doing. Would I trade Tesla again today? It's already down 1.5%, down $3. Let's go look at the expected move for it. The expected move is $3.26, open at 241. So where are we now? 241.73. So right back at the open. It's made its expected move up and down $3.61. So I have to look at that and I have to say to myself, do I want to get back into this trade today? Would I ever trade Tesla for the rest of the day? No. These are the other 4 positions I was watching. These are the positions I always watch every day, like clockwork, because I need to see where and when, which one is more volatile, which one's going to give me the biggest bang for its buck. Would I love to trade Apple today, but I want to focus. You see the volatility bands here, how wide the state is, the volatility bands in pre-market. You see what Apple's doing, it's just petering off. And then you see how tight the bands coil. When the bands tighten up like that, there's going to be a movement, right? This is compression. When you see that compression there, you see the bands, they flatten out and then it opens up. So if I would have took Apple on this position here, I would have just waited, right? I would have waited until I hit this candle right here where it turned yellow. Because I'm color coded and I see the 20 and I see the volatility band opening up to the downside, and that's when I would have took my trade, and that's when I would have been out. That would have been a 2, 4, 6, 8, 10, 12, 14, 16, 18-minute trade, or there would have been a 12-minute trade. Either way, I would have took that trade, got out on that low, and then this would have been a very volatile move right there. I would have capped this off. This is closing up again. This just turned on this candle here. I would have waited for my setups. Always count back 3 for your setup. 1, 2, 3 right here for the setup. What is the setup telling you? Bearish, but now we're bullish. It rips. I would have waited, because why would I have waited? Well, because look at this earlier setup right here. Look at the open. Why would you want to take that trade before it passes over that breach point? No matter if this moved or not, it doesn't matter, because you got that retracement. What type of a retracement is this? This is a 23. This is a 23.6% retracement. You want me to prove it to you? Let's see here. Let me go from the low. Let me take it from this move right here, because that's where I'm talking about, right? So from the reactive low right there to the reactive high right there, what's that pullback? That pullback is, well, 23.6%. How do I know? Right? I can look at the candle configuration right here. I can look at the candle configuration right here, and I can look at support and resistance. Like, I've been doing this for not as long as a lot of other people, but I have invested tens of thousands of hours of screen time to the point where I got to get my vision corrected. And I'm cooling off and stepping back now. So the reward is there for me, because you see the daily trades, you see what's going on with the income. But there is a price to pay if you want to get to that level where I am. But how do I know where these levels are? How do I know it's 23% retracement? How did I know that, right? One of the golden means, right? 38.2. Just tapped it, right? How do I know that's going to be 23% retracement off of that movement and then that big rip, right? If I was to get back in Apple, that's where I would have took. Right there, I would have sat and I would have waited for that move and took it. But I was in Tesla and looking at Tesla. So that's Apple. Microsoft I was looking at as well. These are the 4 positions I look at daily. I would have never took Microsoft right here, because this is where you get chopped up and carped alive, right? This is low-level consolidation right here. Off of the low, look how fast it hit the low, then it pinged and rocked, and then all of a sudden you got this mess right here. This is just a traffic jam. Like, I would never take something like that. I would just wait. What am I waiting for? Look at the volatility bands tightening up, right? There's the expansion, right? There's the expansion right there. Would I have took that trade on Microsoft? No. I saw it, I was looking at it, and I was just like, you know what? I don't want that traffic jam. And then that pop, I'm looking at the pop. How big is that pop? It's gonna hit the lower edge of the volatility box. How do I know to draw these volatility boxes? I mean, look at where the high is, the intraday high, and look at my volatility box. They're literally right in alignment. Touch, it's not going to break through the box. It's going to hit the lower end of the volatility box, and it's just going to crash, right? What I've taken the trade on the downside, still really choppy. I don't like it. That would have been a tough trade to sit in because of the configuration, because of what's going on. You can clearly see it right here. It's just down, bounce, down, bounce, down. I mean, I would have took it had I focused more on Microsoft. I'd be like, okay, here we go. Here's the expansion right here. But this volatility band is up, and this is pointing down, and it's pushing. It's just as a traffic jam. This is a difficult trade to be taking, right? So I would have sat. Here's my consolidation right here, and then that movement, I wait, there's a bounce, there's a rip back up again. I'd be sitting there and I'd be waiting. This for me is not confirmation. This 20, the 200 here is green. So I'm just like, oof. Now the 20 is predominantly strong in this configuration. And I'm just like, man, I have to wait for confirmed. I would have took it right here. and here's my 200 right there, still green. That would be my stop. If it breaks out past that 200 or above the 200, after I got into that trade right here, there's my channel. That's my stop right there. That 200 right now is flattening out, but the 20 is predominantly strong, and it's pushing down on the stock. And the volatility band right here now is opening up to the downside. So yeah, I'd stay in that trade because the top volatility band is flattening out. If the top volatility band flattens out and turns down, then I'm definitely staying in that trade. Right? So that's Microsoft. And then we have NVIDIA. I'm looking at NVIDIA. NVIDIA literally is almost the same pattern. The 200 here is pushing down. It's pretty heavy on NVIDIA, but this would have just been a dangerous trade to take. And I saw it and I was looking at it. I was like, no, I love the volatility. But that pattern, I don't like this pattern. This pattern right here it's a lot of, you get carped alive here. And the volatility bands are, for the most part, the volatility bands are flat and are sloped. You see the slope of the volatility bands here with the 200. So that tells you right away, and it's tight, it tells you right away, that'd be a sloppy trade. Even though it's, I would wait right here. I'd have to wait, actually right here, right there, and then the volatility band flattened out. It's flattened out here. It's compressed. It opens up. This opens and turns down. My movement right there on this 3 candle setup, the 200 is right there pushing down, and the 20 just turned right there. So right here, I would have took my position. And I would have got in a little bit of consolidation, which is fine. That's a low level consolidation. That's what I want to see off that drop. Spin, 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 spinning top, spinning top, spinning top, spinning top, and then boom. That movement right there, and that's when I would have got out. This would have been the lower lows, inverted, bullish hammer, but it's in a bearish situation. Look at the 20, look at the 200. I would have tapped out right there on the low. You always want to get out on the low or the next candle or two after the low, depending on what happens, and on the high. The next candle or two after the high, you want to look at it. Is it breaking down? Is it going to consolidate and then break out? You got to make the decision, do I stay in the trade? I'm always out on either or of the extreme. I'm looking for the extremes. This is compression. This is expansion now to the downside. That would have been a beautiful trade, right? So here you go right here. So that's NVIDIA. That's how I would have traded NVIDIA, right? But it was Tesla. So that's it from Double P. I hope you enjoyed this end of the day trading session. I hope you took the trade. You would have made a ton of cash. I'll see you next week in the next trading session. Take care, everybody.